From warp speed to stall speed, that's the concern of some forecasters as they process the uncertainty of a still spreading coronavirus, the coming elections, and the ongoing battle over stimulus. The CNBC rapid update sees the economy slowing to 3.7% this quarter from the breakneck 33% of the third quarter that we reported next week. But some Q4 estimates as low as 0.2%, others as high as 8%. Over at Deutsche Bank, economist Brett Ryan says the labor market recovery appears to be slowing more than anticipated, which is another reason we're hesitant to raise our current quarter real GDP growth forecast of 0.2% just yet. The outlook for the consumer, that's the big swing factor, with some arguing that the springtime care relief package injected enough money into people's pockets to keep Americans spending. That's the idea of Stephen Stanley at Amherst Pierpont. He sees growth as high as 8% this quarter. He writes, the savings rate is sky high, so households have more than enough purchasing power to sustain growth in spending. Now, while some economists believe no new stimulus is needed, many think it is, and that's a huge swing factor in the outlook. Annetta Markowska from Jefferies says without it, September will have been, quote, the last hurrah for consumer spending in this recovery, Kelly.
Even if we got 8%, Steve, we're still a ways off of what we were going into the pandemic. And it looks like, as you compare nations and their recoveries, China had that pretty strong GDP figure. And everyone's trying to figure out, whether to take it at face value or not. I mean, you always wonder that with Chinese GDP, but, are they able to kind of come roaring out of their massive shutdowns and then be the first to get back to pre-pandemic levels and keep going from there?
Well, the joke is that China gets the GDP that it wants to get. So let's put that aside for a minute. You and I can have a long discussion, and I'm sure you'd have a ton to contribute on just how good the Chinese economic data is. But you can put that aside, Kelly, and you can say, you know what? Countries that get the virus under control more quickly are going to come back economically more quickly than others. It's pretty clear in the United States the coronavirus is still growing. It still creates uncertainty. It still creates lockdown. And it's still an issue that's holding back economic growth. So whether China's numbers are right or wrong, to the extent that they have the virus under control more so than we do, that would seem to be a factor in the differentiation of growth.
Shepard Smith here. Thanks for watching CNBC on YouTube.